What's up, guys? We are here again to represent another week ahead market analysis and fundamental outlook. This is Ali, and I hope everyone is doing well to start a good week together. Let's quickly go to the main story. What do we expected in this week? By looking at the economic calendar, we have several important events in this week. On Tuesday, we have BOJ monetary policy statement and interest rate decision. What we expected for this decision is to hold current rates at minus 0.1%. Let's look at the Japan economy data. Inflation continues to decline and the sharp drop in wage growth have convinced investors that the Bank of Japan will delay plan to exit negative interest rate policy. As a result, the Japanese yen lost more than 5% of its value against the US dollar in the first 3 weeks of the year. For a long time, market pricing indicated that the Bank of Japan would end its negative interest rate policy in April 2024. However, trader now believes this will happen at the July meetings, which has caused the Japanese yen to take a heavy hit. Look ahead, Tokyo's inflation data to be released on Friday could influence market perception and reaction to Japanese economy conditions. On the other side of Eurozone, we have the European Central Bank's monetary meetings on Thursday. Market pricing suggests that there will be no change in ECB monetary stance. As a result, ECB President Lagarde's comments could have more effect on the euro and shape its future path. Several European Central Bank officials have recently tried to counter speculation of an early than expected interest rate cut. Market now seeing 85% chance that the European Central Bank will cut interest rate in April, but Eurozone monetary officials, including Lagarde, have warned that it is too early to even talk about monetary easing. Instead, European Central Bank officials have indicated interest rate cut in the summer. As you can see, the European inflation data is cooling down, but in recent months, this inflation has shown a sign of sticky, and for this reason, it sends patient signals for the European Central Bank. Also, looking at the economic growth data, should be kept in mind that in several Eurozone growth data, it constant GDP for Eurozone make it difficult to keep ECB rates at this level. As a result, our opinion is that even if the central bank doesn't say anything about easing policy, sooner or later it will be forced to do it. It's a busy calendar for Euro in this week. On Wednesday, we have several manufacturing and composite PMI data, and on Thursday, ECB rate decision. All the expected PMI data is more than the previous, so market sentiment is favored to the Euro on this week, and any surprise in this data could volatile the Euro prices. Okay, let me change the topic to USD and CAD currency. All Canadian economy data has suddenly declined in inflation and economic growth, but the data that has renewal concern about the increase in prices is the data of the employment rate, which has a decline trend. On the other hand, Canada's problem due to high immigration and unprecedented increase in housing price make worse this concern. With inflation close the central bank's target, they are likely to keep interest rate steady at this meeting, but may take a more dovish tone, slowly paving the way for the start of monetary easing cycle later this year. The BOC interest rate decision is on Wednesday. Currently, the market pricing indicates that the Central Bank of Canada will cut the interest rate with chance of 50%. Therefore, the Bank of Canada's monetary meeting will be very interesting. If they are more dovish, we could see joining seller in this currency. Now it's a US dollar turn. PMI data on Wednesday, S&P manufacturing and services. The GDP fourth quarter of USD with lower forecast will be released on Thursday. Also, the jobless claims with higher forecast. The GDP forecast is around 2% lower than last quarter print, but what we expected on it is a surprise print higher than 2%. Because the Atlanta Federal Reserve GDPNow model predict it around 2.4%, which could boost the US dollar if accurate. It might influence trader rate cut expectation. Also, we have PCE index on Friday in yearly and monthly. The core PCE price index for December, which will be released on Friday, they are high impact event. This event is considered very important in shaping expectation about the Federal Reserve monetary policy. If the data comes in significantly higher than expected, it could affect the market perspective of the Fed future monetary policy. With a summary of the whole market, we will end this video. According to the table of interest rate of central banks, all banks are expected to keep interest rate at current levels. So you should keep in mind that any data that can change this expectation can cause sudden change in currency prices. All central banks are considering the necessary conditions to end their hawkish policy, whether to keep rate at the same level or start dovish policy. Their concern is the reduction of economic growth with higher rate or the increase of inflation. We as traders should focus our attention unemployment rate, wage growth, inflation, and economic growth data, because any change in these data are the roadmap of central banks. They can change their monetary path. Let's take a look at the COD report data. What stands out the most is the resale of bond yields. This indicator that tell us the prospect of big traders or speculators. As you know, the sale of bond yield in the future market is a sign of traders' expectation for a decrease in yield, and this can again affect the dollar index and put downward pressure on it. On other currency, the big changes are for Australian dollar by 50,580. Three contracts got or more sales on it. A big short on S&P 500 and 3,500 close position on CAD and 2,500 more sell on it. The big traders bought British pound with 5,000 more buy and around 4,600 of close sell contracts. That is shows a new possibility of pound rally again. Also, they sold euro by 6.6 thousand contracts changed. This data give us an overview of the market, which can be summarized as selling the yield, selling the indicates, euro AUD, and buying the British pound. This video is end. Thank you for watching, and don't forget to subscribe our channel. We will be in touch soon.